much for joining me today to learn a little bit about California gold. I only have 10 minutes, so I'm going to jump right into it. We've got a very exciting project in Eastern California that we acquired in 2013. What you see over here on the left side is the state map of California. And within that, you got this north-south trending belt that is known as the Mother Lode Gold Belt of California, the site of the California gold rush of the 1800s. All these golden dots that you see within the belt are thousands and thousands of historic mines that sprouted up overnight when the gold rush was in its full swing in the 1800s and early 1900s. Our project, called the Fremont Project, is denoted by that yellow star towards the southern end of that Mother Lode Gold Belt. The interesting thing about our project is that out of the 200-kilometer long belt that is the Mother Lode Gold Belt, we have a 4-kilometer strike of the belt on our property. So effectively, it gives us 2% ownership of 2% of the structure, the Mother Lode structure in California. The project itself is a private piece of land, 3,351 acres. It's 100% owned surface and mineral rights by us. We purchased the surface and mineral rights in 2013. We've had the project for a little over 4.5 years now. The infrastructure on the project is absolutely fantastic. We've got a highway that goes right through the project. We've got a Pacific Gas and Electric substation on the property as well, with lots of excess capacity on it. There's a 75 kilovolt power line that runs east-west on the property as well, lots of excess capacity on it. We've got access to water, which is a very critical thing in California, which is going through 7 years of drought now. Most other places in California, access to water is a big issue. On our property, it's not. We've got a private well that is deeded to us. And also just to the north of our property, we've got the Merced River, which is a pretty big source of water for the area. And we've got to deal with the Merced Irrigation Department that we can purchase plenty of water for extremely cheap prices. We're not near any major population centers, but we are close enough to the town of Mariposa, which is only 14 miles down the road from us, where we can source all our local labor, supplies, equipment, contract workers. This is ideally located. On the right side of this slide, you'll see a close-up of our property. It's a property map. As I mentioned, 3,351 acres of private and patented land. That's roughly 4 kilometers by 4 kilometers. And within that map, you will see the 4-kilometer strike of the Mother Lode structure running on our property. That's denoted by the blue and brown shaded portions. Out of that 4-kilometer strike, in the last 3 years, we've drilled off only that brown shaded portion, which is roughly 1 kilometer in strike length. And within that, we came out with our first resource estimate in November of 2016. On the left side of this slide, you will see the resource in this table. It's almost 900,000 ounces, most of it sitting in the indicated category, a small portion in the inferred. Average grade is 1.6 grams per ton. It's very shallow, in the top 225 meters, because that's how deep we drilled. Also on our property, we've got dozens of historic mines from the gold rush days. I've highlighted 5 prominent mines. You can see there's 2 mines that have been highlighted, the Pine Tree Mine and the Josephine Mine in that brown shaded portion. We've also got 3 mines, the French Mine, the Evans Mine, the Ogle-Lease Mine on the rest of the property that I've highlighted here. The Pine Tree and the Josephine mines, when they were in production, by the way, all these mines were underground mines back in the day. The Pine Tree and the Josephine mines, when they were in production in the 1920s and 1930s last, were averaging between 5 and 11 grams per ton and went down to depths of about 500 meters below surface. The French mine was the highest grade mine on the property and was averaging about 32 grams per ton when it was in production back in the day. The Evans mine was averaging 23, 24 grams per ton when it was in production in the 1920s and 30s, and the Ogle-Lease mine was averaging about 18 grams per ton when it was in production back in the day. So we've got some very high-grade mines, historic mines on the property that are actually sitting away from the main Mother Lode structure. Of course, we've got a 4 times expansion potential along strike on that initial resource that we came up with in 2016. But we also have these high-grade mines that are sitting off the main structure. And when we first purchased this property in 2013, we actually didn't really understand why those mines were sitting off the main structure. And I'll explain that in a couple slides from now. This is a long section From the left to the right, you're looking at the extent of that resource zone, that brown shaded portion that I showed you on the previous slide. So that's 800 meters from left to right. Those are the two mines that I pointed out. We're looking northeast into the page, and we're looking down into the ground. Those are the two mines, the historic mines, the Pine Tree and the Josephine mines on that brown shaded portion. Collectively, they go down to a depth of about, well, let's say 1,300 feet on the lowest level here, but the lowest level was 1,550 feet, which is roughly 500 meters below surface. Our resource only goes down to a depth of only 225 meters below surface. So you can see we have a 2 to 3 times expansion potential at depth. The reason they stopped production at roughly 500 meters depth is because that's when they intersected the water table, and back in the day, they didn't have the technology to pump the water out fast enough to continue mining below the water table. Of course, these days, it's a different case. But at least down to the water table, we have a 2 to 3 times expansion potential at depth. And also, when the mines were in production, you can see some of the grades that were being mined out in the table to the right. The grades are between 5 and 11 grams per ton. The average grade was 7, 7.5, 8 grams per ton. In our deeper drilling, in our deeper exploration drilling, we're actually finding exactly the same kind of grades. On this slide, on the left side, you will see our property map again. And just for reference, the blue shaded portion in the middle is where our resource actually sits. In 2014, I hired 9 geologists and sent them out into the field for 3 months, and we covered the entire property for the first time. And the red zones are the new zones of mineralization that we discovered on surface. This is purely based on surface work. So of course, we established the 4-kilometer strike of the Mother Lode Belt running on the property. But very importantly, we found a couple of parallel splays on the western side. If you remember, the Ogle Lease mine was sitting right around here. You look at the grades over here in the Ogle Canyon zone, we took some surface samples, 18.48 grams per ton. That's actually not a fluke. The Ogle Lease mine was averaging 18 grams per ton when it was in production back in the day. On the eastern side, we found this massive conjugate structure, which is roughly 2 kilometers long by itself, half a kilometer wide. And look at some of the grades that we discovered in that eastern zone. 32.8 grams per ton. That's not a fluke. That sample was taken right next to the French mine, which was averaging 32 grams per ton back in the day. Next sample shows 20.67 grams per ton. That's not a fluke either, because that was taken right next to the Evans mine, which was right over here, averaging 23 grams per ton back in the day as well. So in 2014, we actually established a much deeper understanding of the structural complexity of our property package. And now it made a lot of sense why those historic mines were sitting where they were off the main trend. So not only do we have a 4 times expansion potential on that initial resource of 900,000 ounces along strike, we also have a 2 to 3 times expansion potential at depth, as is evidenced by the historic mines on our property. And also, we've got these high-grade structures to the east and to the west that have been recently discovered, but have not been explored in the last 100 years. This is a map just showing some airborne magnetic data that we collected in 2016 as well. I'm not going to go into too much detail over here. Just wanted to mention that we did our surface mapping work that I showed you on the previous slide in 2014. This airborne magnetic survey was flown in 2016, and it basically gave us near 100% corroboration on everything that we discovered in 2014 through our surface work. You can see the 4-kilometer extent of the Mother Lode Belt in the middle. On the western side, you can see a couple of parallel splays. That's where the Ogle Lease mine or the tractor mine is. And then on the eastern side, we found this massive zone, which we discovered by our surface work as well. So it was a pretty good correlation to our surface program in 2014. We've had the property for 4.5 years. In the last 4.5 years, we've done multiple drill programs on the property. We've got a very close, tight-knit shareholder base. 85–90% of the stock is actually held by about 8 or 9 high net worth families. The board and management collectively own about 65–70% of the stock. And these 8 or 9 families have been funding us, with respect to our exploration programs for the last 4.5 years. We have raised about $17.5 million from these 8 or 9 families. Very loyal, very supportive, and especially very deep-pocketed as well. This is some of the work that we have done. Phase 1, Phase 2 drill programs were conducted in 2013, 2014 to show the gold mineralization was actually intact. We also did some preliminary economic assessment level metallurgical test work that actually gave us beautiful recoveries, fantastic concentrate grades. But the bulk of the effort on the exploration side was spent on the Phase 3 drill program, which eventually culminated into the maiden resource estimate that we released in November of 2016. This is just a slide that actually shows the mineralization on the left side in a cross-section. We're looking northwest into the page. This is surface right here, and you're looking down into the ground. The beauty of the Mother Lode Gold Belt is that the average true thickness of the shear zone that controls the gold mineralization is 35 meters wide. And that's what makes it so unique. That's what makes it so much more prolific. You know, a little bit of drilling can go a long way in terms of adding a lot of ounces. These are some of the grades that we intersected. I'm not going to go through the grades myself, but you can actually see that in the electronic presentation when you get it. But these grades are very conducive to both open pit mineability and also deeper down to underground mineability. And so we were very happy with the results that we got in 2013, 2014, and also in our recent drill program in 2016. This is some of the work that we have outlined for the next 6 to 12 months. We have just completed a property-wide soil geochemistry survey, soil sampling survey. The results should be out in the next 2 weeks. We also have completed this airborne magnetic survey that we have reinterpreted. We're going to put out that reinterpretation in the next 2 weeks as well. We're in the process of collecting some IP data on the property and some VLF, ground VLF data on the property as well. That should actually come out in the first, second week of December. And next week, we're starting our drill program to conduct a second resource estimate or generate a second resource estimate on a second kilometer of strike of the Mother Lode Gold Belt on our property. The drilling is going to be roughly 35 to 40,000 feet. We should have the drilling completed by the end of March. The resource should be out in June. At that point, we should have a substantial increase to our total 900,000 ounce current resource. And 50% of the strike will still be unexplored. All the depth potential will still be unexplored. And of course, the new structures to the east and to the west will still be unexplored as well. This is just a map showing some of the active mining companies in California. On the right side, you'll see 4 projects that have been permitted from scratch in the last 6 years, 7 years in California. We are in a county called Mariposa County, which actually is an autonomous county, where the county itself is a lead agency when it comes to environmental permitting, which means that we don't have to deal with the state officials, we don't have to deal with the federal officials. Even the state and federal permits have to be issued by the local county office. So of course we have to adhere to state and federal guidelines, but we don't actually have to deal with 3 different sets of officials, which extremely streamlines our permitting process. Also, of course, we're on private land, which also streamlines our permitting process quite drastically. We don't need any exploration permits. We can put a drill rig anywhere we like, start drilling right away, because it's private land. Here's our share cap structure. We've got 40 million shares outstanding, roughly $1 million in the bank right now. We're just in the process of completing a $1.2 million financing that we expect to have completed on Tuesday or Wednesday. And Thursday is when we are expecting the drill program to actually commence. As I mentioned, the board and management collectively own about 65 to 70% of the stock. 8 to 9 families hold about 85, 90% of the stock. One of our biggest problems has been liquidity, which we're trying to induce into the stock now. For the first time, we're going to try and open the stock up to public markets and get some new shareholders. That's it for the presentation. There's some bios that you can read at your own leisure once you get the electronic version of the presentation. Thank you very much.